Right, we can get started then, folks. So, let me just say good morning to everyone here, and welcome to this webinar. This is Mark from FX Instructor. Now, guys, as you know, this is all about the ECB meeting, or the ECB rate decision. Although, I have to be honest, I don't really have any high expectations with regard to generating volatility from this ECB decision. Why do I say this? Well, let's put it this way. There's really no big issue for the Eurozone right now. About the only crisis that, if you can call it crisis, that I can see is the number of immigrants that's hitting the shores of Greece from the Middle East. So that's really not much of a market moving issue. So internally, when the ECB meets later, there's no fire that they need to douse. However, they do have to consider the external environment that everyone's operating in. And what's the external environment? It looks ugly. The last time I was here at FX Street, we were talking about a stock market sell-off. The last time we had this ECB webinar, we were also talking about the Chinese stock market sell-off. Well, apparently, that stock market sell-off in China has finally caught the rest of the road. You have equity market sell-offs even in the US. So that's one consideration that the ECB may have. The current weakness of equity markets and how would that translate into confidence, into consumption for the average European. What else? Another consideration that's top is, it's not really new, but I would say more of a story that's been refreshed. The idea that commodity prices will remain low. In fact, oil prices are now at 40 or below 40. I haven't checked just yet. But suffice it to say that oil prices are once more under pressure. And we spoke about this the last time, and we were also saying this is an issue because with lower oil prices comes the notion of deflationary pressures. And with deflationary pressure, what happens? Well, if you have deflationary pressure, it basically, in the case of the ECB, it basically gives them some leeway to perhaps provide even more liquidity to the system. In fact, that's actually one thing that we should be watching out for during the press conference. Will Mario Draghi be raising the idea of providing additional liquidity measures? Will they be announcing something new? Although so far, we haven't really gotten any hint of any new tool or program that the ECB has concocted. Remember that last week was Jackson Hole Summit, and basically the monetary policy officials, the ECB officials who were attending, who were in attendance at the Jackson Hole Summit, gave us a dry performance. They just talk about how the transmission mechanism in the Eurozone economy from confidence to actual spending is working. So there hasn't been any clue of anything new in terms of a policy tool being announced, but the opportunity is there if Mario Draghi feels like he should. The opportunity is there because you have a drop in commodity prices. You're actually risking a deflationary story. And one way to fix a deflationary story is to try to encourage consumption, encourage investing by providing great liquidity in the financial system. So that's the thing that we should be watching out for during the press conference. The idea that there will be some surprise announcement about a new tool that could be tapped by, say, countries like Greece in order to boost confidence, and with the increased confidence comes spending, which is really what is needed right now by developed economies for consumers to start buying things. So after having said that, let's just move on to the charts. Because as I said, there's really not much that we could expect from the rate statement. There will be no rate hikes, no rate cuts. It's very highly unlikely. Although the point is, if nothing is expected and something does happen, we do tend to expect that it's going to lead to some major action. And if you really look at all the risks that's involved right now, the Chinese slowdown, the stock market decline, the risk of a deflationary environment, all of this, as we said, creates an opportunity for Mario Draghi, for the ECB, to, out of the blue, without having hinted before, to start talking about the potential for more easy measures, for more money printing ECB style. So that's what you look for. And if that happens, what are you supposed to do? Well, according to textbook, anytime that a central bank considers printing money, anytime that you increase the supply of something, the value of that something also drops. And by the way, where your euro is right now is actually also a good reason to talk about the potential for a surprise announcement on monetary easing. Why do I say that? Look at where your euro's low is for the year, at 104.62. Where is euro at the moment? About 12, what is this? I think that's 1237. Let's just say 1200. So it's expensive relative to the year's lows, which again provides an excuse for monetary policymakers to consider adopting an easing measure. Remember that the impact of any easing measure is to weaken the currency. If you increase the supply of something, you make it less valuable. Okay? If you increase the supply of something, you make it less valuable. And one solution to the problem of dropping prices, you increase the supply of money, encourage people to spend, encourage businesses to invest. All right, so how do I try to take advantage of that potential for a surprise announcement? Let's take a look at our chart. And what do we have? Your 21 change for euro is about 130 pips. Okay. For today, you've only had 38 pips of price action. Now, what did we say again about surprises, about monetary easing, about increasing the supply of money? Do that, and the value of something drops. So if during the press conference later, and like I said, forget about the rate announcement, nothing's going to happen there. You focus on the press conference. And if during the press conference they talk about future, or they talk about the possibility of providing greater liquidity, they talk about potentially new measures to do so. And I would expect that our euro would sell off. And if I were to just, if I want to just be hands off in my trading, I would consider putting some sell stops somewhere, hoping that somehow your ECB would surprise you. And like we said, if the ECB does surprise us, it's likely to be to talk about more monetary measures. If they do that, the easiest strategy really would be to just use the day's lows, about 1205, and use a push to your 1205 floor to argue that, all right, it sounds like the ECB is dovish. It sounds like the ECB wants to print more money, wants to create liquidity. And if that's the case, I better look for my currency to weaken. So guys, very simple strategy for me. Just focus on the potential for surprises about more monetary loosening. And as a trader, our strategy will be simple. Go look for a push below the day's lows. You can use that as an entry point. Other options? Well, I do like using pivots. And I do have my S1 in pivot at 1189. So I can use a push below 1189, hopefully a close below 1189 as well, to argue jumping short. So that's one option that we have as far as this rate decision is concerned. Now, what about prospects of your euro actually going up? Well, guys, there's really nothing in the calendar right now that would have me think euro's going to rally. There's nothing in the rumor mills, in the grapevine, that would have me think ECB would had gone bonkers and decided that they would tighten. Most central banks, even the Fed, I would dare claim this, are actually more concerned about slowdown, are actually more concerned about sustaining growth, sustaining recovery, and facing inflation. So to me, the only risk that could be anticipated is the potential for an expansion of your supply through some mode. We don't expect them to take any immediate action, We just expect them to announce that it is being considered. That is enough for us to say break in the day's lows at 12:05 or break your S1 from your pivots. All right, let me take a look at other Euro charts. And if you have any other thing that you'd like to look at, feel free to raise it. As far as this announcement is concerned, it's likely to be mostly a dud. But what's happening in other Euro pairs? What's interesting, guys? Let's take a look at your EUR/AUD. It's a wide-ranging pair. Wow, look at this. Average range for EUR/AUD is about 259 pips over the last 21 trading days. Oh, I guess your value per pip is about $7 though. So that compensates for the wide daily range. But what else do we know about EUR/AUD? And how we need to respond to news with respect to EUR/AUD? Well, as we said, any sort of surprise would probably be calling for weakness for monetary easing, and as such would be calling for weakness in the currency. What makes EUR/AUD interesting is this. If you look at your daily chart, you've actually rallied a lot in EUR/AUD the previous week, and rally has led us to what? Has led us to highs at 65.59. Working rate is at 60 right now. Has led us to a very noticeable double top. What else? We do have lower highs in that daily double top. So I'd say we could be in for an interesting time. Your technicals are telling you lower highs in the dailies, a bearish reversal pattern forming. The only issue that I have about generating an EUR/AUD sell-off is that you did end up with poor data earlier from Australia. Although it was really more mixed than completely poor. What happened in Australia? We saw retail sales contracting. Trade balance was not as bad, although it was still a contraction at minus 2.4 billion. So fundi-wise, I would say argument for a strong Aussie is not there. Technical-wise, you have a nice setup, nice enough trading ranges, and all we need is for a disappointing statement during the press conference. All right, what else is there beyond your EUR/AUD? It's interesting. By the way, we're about minutes away from the rate decision. Well, Pan and Fire, I would agree with you. It's in his best interest. Helps in generating consumption. Helps in attracting some tourism. Helps in making Euro goods more competitive. And it also would help prevent an actual deflation from happening. Okay, where else should we go? One of the major stories that we should be hearing, and we've actually started to hear, is the idea of risk aversion. Remember that when you have volatility, when you have uncertainty, a lot of people, a lot of traders would prefer not to be around, not to be involved. Risk aversion. Now, when it comes to the currency market, how does the risk aversion story come to reality? We normally expect what currency to gain ground? The Japanese yen. Why is there such a relationship? Simply derives from the 90s when the Japanese economy saw its lost decade, when interest rates fell to zero or negative, and that has meant what? That has meant, or that has forced Japanese investors before to be more active overseas, to start investing overseas. And it's also encouraged a lower, given the lower interest rates in Japan then, it's also encouraged speculators. And there should be sound. Oh, I lost my train of thought. Okay, we're talking about uh, the yen. So whenever you see a risk averse story, stock market sell off. Okay, whenever you see the stock market selling off, especially if the stock market and the bond market selling off, then you find people in need of haven. And one of those havens is the Japanese yen. Why the yen? Because a lot of speculation, the assumption is a lot of speculative money has also come from Japan. Because since the 90s, they've had low interest rates, almost zero interest rates. It has been the practice, it has been the norm of bigger institutional traders to borrow some short-term funding, short-term capital out of Japan, those low interest rates, and use that borrowed money to trade overseas, to invest overseas. So when these people find that instead of making money, they're actually losing because the stock market where they invested, they sold off, they get forced to close their positions, close their trades, and to send the money back home. And that's why that relationship of market weakness, of fear, and a stronger Japanese yen. So as far as our story is concerned, how does this all tie up? Well, let's put it this way. If you continue to see an equity market sell-off, and you have Mario Draghi later starting to talk about the need to buttress the European economic recovery, then I think that could be interpreted as, from one end, you have demand for the Japanese yen, you have pressure to see a stronger Japanese yen because people are opting for haven. And on the other hand, you have an inherent weak euro story. If like we said, if during the press conference Mario Draghi were to sound off with proposals for more for generating greater domestic liquidity, then I would say that one of the best pairs to be in would perhaps be your dollar yen. When you're trading, you want to find yourself in a situation where one currency is expected to be strong and the other currency is expected to be weak. And a story the where the ECB talks about printing money and where global investors are looking for haven means that we ought to look at a euro yen trade. Technically, where are we? Is it cheap? Is it expensive? Where's the chart? Weekly chart for euro yen, and where am I here? Let me drag some fibs in your weekly chart. This is from 14 all the way down to this year's lows. Not too cheap, isn't it? Look at your EUR/JPY, and we are at 135. At one point, we were at lows of 126. So I would say there's room to maneuver. What else? Isn't that a head and shoulder in your weekly euro yen? Your head, by the way, coming off 61.8 trade retracement at 140. When I go dailies, only 46 pips of price action today. Average range is 122. So not much action so far. Only a third of your average daily range, and the potential of a weak equity market leading to a stronger Japanese yen. And of course, the potential for Mario Draghi to hint about the need for ensuring recovery. A combination that says your euro yen could sell off more than its normal range. And if it does, what's the target? Well, at least I would look for it to try to make a run for this area around your 30 to 44 region. We are less than 2 minutes away from our rate decision. Again, we do not expect to see any changes at all in European interest rates. The real story will be during the press conference. Will Mario Draghi be hinting about the potential for more easing measures? So less than a minute, folks. 27 seconds until your decision, which, as we said, we expect to be a non-issue. Any chart that you'd like us to look at, folks? 12 seconds. Look at those euro charts. All right, pan and fire. Let's just see if I can find a chart with the DAX. I have one somewhere here. I'm just looking for a DAX chart, guys. Oh, by the way, as we said, as could be expected. Nothing from the rate decision. The key story will be during the press conference. They to hint about further action. All right. While I'm looking for a DAX chart, let me just go to Euro. Overall trend for your Euro to me bearish. Sure, we've recovered a lot 2 weeks back and we've sold off. Technically, a lot of people will tell you, isn't that a bounce from 61.8 retracement? And I would say, yeah, it is. However, as far as trading this particular situation is concerned, as far as trading the press conference is concerned, I would be looking for the possibility of a dovish surprise. Maybe Mario Draghi talks about the deflationary risk that the drop in oil prices impose. Mario Draghi talks about the risks that the global economy is facing because of the stock market sell-off. So this combination to me opens the slight possibility that we get some negative surprise. Well, to some degree, I would say yes. There is a competitive issue, and that a weaker euro would also help the Eurozone countries. Although, whenever you talk about Chinese exports and European exports, to me, it's an apples to oranges comparison. You're normally talking about high-end luxury stuff or high-end capital goods when you talk Europe. And I don't really see that much coming from China. Although I've dealt with people who basically get designs from Germany and go to a Chinese manufacturer or a fabricator and have a knockoff copied. Hey, I deal with importers here. And I've seen some factories do that. They get a brochure from Germany and present the brochure to the Chinese and ask them, can you copy this machine? Also, as far as trading is concerned, the only thing that I would do for Euro is to consider putting some sell stops under the day's lows, ideally below your pivot, given the potential for a surprise announcement. Not that they will cut rates or anything, but that they may announce that they're considering more easing measures. You just have to hear those words. More easing measures in the future. It doesn't have to be today. But I think that ought to be enough to move a market that stayed at the 38 pip range so far. And let me see if there's a DAX chart here. There we go. What can I say about DAX? It's ugly. Let me clean this up. Now, we've had a big pullback here, 2011, so I'm not going to base my count from there, base my measurement from there. Rather, measurement of the rally from here. So what does this chart tell us? DAX actually can be seen as in a bear market already, down 20% from its peak. That was a month. Go weeklies, and what have we? After the panic 2 weeks back, We've bounced. Oh, sorry. Let me go daily. And okay, let's focus on these candles here. Right around 38.2 fib retracement. Little sign of strength here. There's no solid bullish candle. And when you go fundis, what do we know? This is a global equity sell-off that's going on. We don't really have any news to drive the market up. So to me, if you're really taking DAX, I would consider selling on rips. Anytime you see it pushing towards 10,600, I'd consider shorting from there. Current levels, if there's no surprise announcement after the press conference or during the press conference, if there's no talk about liquidity measures during the press conference, the current price level is enough for me, counting on 38.2 fibs to hold the top. Maybe just, I don't know if you're trading CFDs, but if you are, then I will just say, as long as you put your stops above the previous pullback highs at 103.89, I'll be fine with jumping short from current levels or from the fib area. The actual 38.5 is at 102.68. So there's no immediate sell me right now signal there. But like we said, we ought to consider selling on rallies in your DAX. All right, let me back over. So guys, any questions, any other concern? Again, much to talk about during this webinar. During the press conference, highly unlikely that there will be any announcement, but if there is, it's likely to be about printing more money, about introducing liquidity, about monetary easing, and that ought to push your euro into weakness. That's why going into the press conference, the only thing I would consider is a sell stop. If it drops, then thank you. Let's see how far it goes. All right, guys, thanks for joining. Good luck with the press conference.